All right, round table. Let's take a look at, sorry, my recording screen got all cattywampus here. Anyway, Trading Tuesdays. We talked about yesterday in particular, now my mouse is going absolutely bonkers. Okay, hopefully everything is now sorted. Trading Tuesdays, we talked about the Aussie dollar yesterday. Couple key things here. Remember, this angle of attack is very, very steep. Another way to think about trend lines is rate of return, meaning how much money are you making, how fast. Everyone in the world, I don't care if you're Warren Buffett, George Soros, doesn't matter. There's something about value, okay? And one of the ways we represent value is rate of return. You might have even heard throughout your history internal rate of return. And the idea here is if we invest $100 bazillion here, we have a target for our rate of return, and it might be expressed as a percent, it might be expressed as a dollar amount, but there's some number. When that number, like the rate, happens very, very quickly, okay, like this, what you can run into is selling. So let me break this down for you in another way. Okay, so let's say, for example, we have a trading firm and we buy in here, and our target for a rate of return would be this price. So what we do is we say, okay, our rate of return equals, we'll say, some percent, right? Some percent. And please don't be a stickler on the math here, because I'm really just kind of throwing this around. So let's say our rate of return is going to be 9% annualized return, which means we sell at 1.0350 because that's our target. And there are some trading firms which do trade this way. So they set all this up. It's like, okay, our target rate of return is 9%. That means when we get to 1.0350, we need to sell. So we're buying down here, buying. Now there are all sorts of ways this could happen, right? It could happen very quickly, right? It could happen like this. It could happen a little bit longer, right? So this first line would represent, like, it could happen in a few days. This could be a few weeks. Sorry for not starting at the same place. So this could be, a few weeks. This could be, maybe a couple of months. We could have, over here, even more months. Over here, even more months. And then, really flat would be, it's like, oh man, that's not going to happen for a couple of years. Let's talk about the effect of this. So if it happens really quickly, what does that mean? Well, it means we're probably going to sell. If it happens very quickly, sell. But here's something interesting. If it happens over here, it also means sell. But we've got to come to the decision at some point before we hit the time part of rate of return. So let me back up. You might be saying, Mac, what are you talking about? Any rate of return has two parts, time and money. Time and money. Now, if the money part happens fast, time, it's not that the time goes away, it simply happens anyway. So when it happens fast, the money part happens fast. Well, what happens if the time part happens slowly? right? So the money part doesn't happen fast, which means time is going slowly, meaning these two down here. What happens as price is going along at a very shallow angle, a very shallow rate of return, the trading firms start to say, you know what, this trade is not working fast enough. We're not going to hit our rate of return numbers. So what do? They sell. So what does this mean? It means at some point the market's going to have to come down. That's why the market goes down, people. It's not magic. It's not some, cosmic force. It's because people are either making their money very quickly or they're not making their money quickly enough. So we talked about the Aussie dollar coming into our little magic trend line here, that we had a pattern based on the rate of return. What does that mean? It means as long as the market has not hit an acceptable rate of return, people will continue buying it. This is a very steep angle, so we also talked about how we need to be wary of selling coming into the market. Here's my hourly chart here, and you can see price just did not hold up coming into that trend line. So aggressive traders, you got stopped out. Maybe we'll see what price that was. I'm just forgetting at the moment. Come on. Yeah, so maybe 245, 250. So right in this area here. If you were buying aggressively against one of these two lows, then you definitely got stopped out. Conservative traders, you simply passed on the trade. The other trade that we're talking about is the Aussie dollar. Now this one, what we said was there's less momentum. Now why did we say that? Why is there less momentum? Well, remember, momentum is the speed that the market is making new highs, if it's going up. How fast is it making new highs and not making new lows? Right, so we see here price made a new high. Right, there was the old high. There's a new high. Okay, cool, easy. Here's a low. When does this become a new low? Right here, when the market goes above this high. Okay, so price comes up, we have a new high. Why? It went up past that one, comes down, boom. Right here, we now have a new low. So, new high, new low. New high. Actually, we have a new high, new high, new high. Again, this is not a new low until when? Right here. So, new high, new low. Okay, cool. So it's making new highs and new lows. These are happening pretty quickly, right? About, twice in a month. But then all of a sudden here, what happens? This is the high. It actually creeps up a little bit. So the new high moves up, comes down, right? Comes down, starts to move up, but then goes down again. Oh, well, wait a minute. Now we don't have a new high anymore. Do we have a new low? No. We don't have a new high or a new low, so we have the market trading in between the high and the low. That's the loss of momentum. That's the process for discovering a loss of momentum. So again, in the coaching session, we talked about some potential trades here and here. There weren't any trade setups for that in either place quite yet, and now I'm targeting trades around the 79.50 level for the Aussie yen.